welcome to today's super packed video, which is going to be called Tariff Wars. There is so much going on in the world that it takes a bit of luster out of the job markets data that I had covered lately. Let's see how the S&P 500 1-hour chart looks following 34% retaliation by China. You know that I have been predicting that China, Germany, France, at least these three, most probably Canada as well, will retaliate against US tariffs. And markets, of course, don't like that, understandably. So what had been happening technically within breadth, within volatility, is getting smashed. Are there enough bearish expectations going into non-farm payrolls? Yes, you bet. What does it say about the boat leaning too much one way? Then there come China tariffs as a new piece to deal with. Nasdaq, very similar picture and budding signs of outperformance pre-market, simply snuffed. Bonds, short-term bonds, continue appreciating, which is exactly what the US Treasury actually wants, because the focus is on defending the US Treasury market and it makes the debt service sustainable and allows for adjustment of how much of the debt is in short-term treasuries and how much of that is in longer-term ones. Of course, that takes a toll on the US dollar. However, do you see signs of stabilization in the US dollar? It could have been seen as well in the US market before non-farm payrolls. So, in case someone wanted to ride on the long side the excessive bearishness into non-farm payrolls and short squeeze developing thereafter, there you got China tariffs. US dollar versus the euro. Euro is having troubles pushing higher. What does it say about the safety trade? Appreciation in safe haven currencies. Japanese yen is rising, Swiss franc is rising. So much for the risk appetite going into non-farm payrolls. How excessive is that? What does Bitcoin do at the very same moment? You know that I had been calling for extreme cautiousness when it comes to gold and silver and locking in the long profits. Silver is tanking. Oil is as well tanking, which had been another easy call to make for trading signals clients. Gold is spiking on the uncertainty and then succumbing just like the rest. So that's a sign in itself as to whether we are in a risk-on or a risk-off environment. And remember that Europe had not yet properly responded. And when it comes to tariffs actually kicking in and the time for trade deals to be cut one-on-one basis with the countries, that time is still here, shortening, and we will have a very interesting weekend. So be ready, and my final word is that one can't be looking for opportunities lasting in days to weeks, but rather in hours to days when it comes to this very volatile market environment with record uncertainty. So have that in mind going into the stormy weekend. My joint page to decide what's right for you based on what and how you trade, and you know all the rest.